July 7th, 2025. I'm not sure why my highlighter isn't working today for 3-bar micro channels, but they're fairly obvious where they were today. In the morning, we didn't really have one. We have a 4-bar micro channel here. 1, 2. I don't even have my bar counter on. Hold on. All right, I just re-added them, but we obviously had a 4-bar micro channel. You could argue it's a 5-bar micro channel, bar 10. So you do not want to buy 10 or 11. That's the first reversal, and the first trend line break is very likely to fail after a 4 or 5-bar micro channel. Tough to sell 19, the first 3-bar micro channel. It's a pretty late leg. If you do sell it, you do get follow through to bar 22. So it's a 6-bar micro channel. When you get 6-bar micro channels, odds are you are going to sit through a pullback, but high probability that you get back to that low. Same way we had a 6-bar micro channel here. Odds are you're going to sit through a pullback, in this case, a complex pullback, but high probability you get at least one tick above the bar 67 high. We obviously had a 5-bar micro channel, 25, 26, 27, 28, 29, but it's a late leg. So I did not take 19. I thought it was 4 legs down. If you did, you could have sold 19, or you could have sold as this pulled back. 23 and 24 is a reversal in follow through, but against a 6-bar micro channel, it's not really that effective. It's not really that great for the bulls. So the bears can stay short or look to re-enter below a bear bar. 30, 31, 32, a 3-bar micro channel. I mentioned in one of my more recent videos, I made a video on it. Contexts that 3-bar micro channel struggles, and one of the areas is parabolic wedges. It might be a parabolic wedge. This is a 5-bar micro channel. I thought it was okay enough that I did take the buy, but I bought small. And the thing with this is I do not want to sit through a deep pullback, right? When you're trading against some sort of parabolic wedge, you don't want to sit through the deep pullback, because if the deep pullback will oftentimes just stop you out. So if you're going to be buying, you want the market to go your way rather quickly. So I bought small, and I bought a little bit more on the close of 33, basically betting that 34 was going to be a bull bar. And I pulled my stop from down here to here, just because if 34 is not a bull bar, then I need to get out of the trade pretty quickly. So 34 did run my stop below 30, but I lost maybe a third of what I would lose on like a normal full loss. So I was pretty okay with what happened there. Because like I said, if I had bought and just scaled in, I would have lost 4 or 5 times what I ended up losing. So, or maybe 3 times what I ended up losing. So it's pretty all right with that. 33 through 35, I did sell the close of 35, and I scaled in at 25 and 50%. You could have just sold the breakout point, the 29 low. Odds are we are going to test the breakout point, but a good bar on 35 or good 3-bar micro channel, 33 through 35. It's a surprise. So I looked at it as a leg count reset, and I was expecting 2 to 3 legs down. Even after 36 to 37, a reversal and follow through, 33 through 35 is stronger than 36 and 37. I thought we would probably get back to the 35 low. We did not get back to the 35 low as quickly as I would have liked us to. And my profit target was, obviously a couple ticks above the symmetrical second leg. So it was right here, and obviously it did not get filled. We have a 4-bar micro channel to bar 41. So I had sold and scaled in. I did not obviously get filled. I did not exit above 44. I don't think you have to exit above 44. It's a reversal signal, but it needs follow through. So whenever I get reversal signals against me, I wait to see if they get follow through. On this particular day, every single 3-bar micro channel got a reversal signal against it. On days where every 3-bar micro channel gets a reversal signal against it, if you trade 3-bar micro channels, you are probably not going to make money, which is fine. There are days where you do not make money with a 3-bar micro channel, but you just have to understand what they are. And on a day like today, I ended up with it wasn't a small, saying it's a small loss is wrong, but it was certainly not large. So I ended up with just like a medium-sized loss. I basically lost less than half, like 40% of one full loss today. And this was a rough day for the 3-bar micro channel. So for me, that's a win. That's completely fine. On a day like today, these days happen once or twice a month where every single 3-bar micro channel gets a breakout against it. And when that happens, if you can get out of that day without getting crushed, I think that's completely fine. So after 45, I need to exit my trade. So I exited on the close of 45. 46 is a 3-bar micro channel, 44, 45, and 46. But you're trading against the sell-off. down to 35, and again to 41. So it's really, it's not really a good buy the close spot. 44 through 46 are exceptional bars, though. So they're good enough that I would expect we're going to get some sort of second leg, but I really was not willing to buy the close. I got impatient. I put a limit order to buy the 43 high, the breakout point. I got impatient and I bought below 47 instead. And I ended up taking 0.5R after 48 because 47 and 48 is enough for me to look to get out around break even. So I did. I got out in this area on the bounce on 49. But obviously 49 did reach the symmetrical second leg target. We had 4 legs down, and we have a 5-bar micro channel. 1, 2, 3, 4, 5. 54 through 56 is not a very good signal. Usually you want to see a stronger 3-bar micro channel than that. And this is at the moving average against a good micro channel, and the whole day has been bearish. So buying on this day is not really that ideal to this point. If you haven't noticed, every single bear signal, well, besides this one, 2 of the 3 bear signals have gotten immediate follow through, and no bull signals have gotten immediate follow through. So you can see you can't really expect the bulls to get immediate follow through on bar 56. I did not buy 56. I bought below 56 during 57, and then I just got out on 57. So I lost like a point there. Reason being, you could find buyers below 56. So I was trying to stay out of the move that touches the 35 low, but we could get a second leg from this before we go to that low. But I was aware that we were going to go there. So I was really not trying to hold any longs. So I bought this low and then just got out below this bar immediately. And I lost like a point, which is fine. Because if it bounces, I'm going to make a lot more than a point. So it's a reasonable trade. 57, 58, 59. It is a triangle at this point, and we broke out below the triangle. So that's a possible leg count reset. But about half the time, breakouts below triangles fail. So this is strong, but you have to be aware of the fact that we could pull back. I was looking to sell a pullback after 59, and then 60 was very strong. I did not sell the close of 60. I still thought we should get a second leg, though. So on 61, I sold the close of 61. I basically wanted to sell around the 59 close during 61 or 62, but I sold 1 tick above 61, which is fine. I know I'm going to probably get a comment from somebody who bought above 61 because if you're trading Al Brooks, that's a swing trade. But if you bought above 61, you probably also bought a bunch of other swing trades. 61 is a low probability trade, but it still works sometimes. But the thing about 61 is it cannot stall. So if 61 stalls, the high probability thing is going to happen, and we're going to get back down below this bar 59 low. That's since odds are we're going to get there. If 61 is going to go, then it should get a follow-through bar pretty immediately, and it did on 62. So 61 and 62, I had sold here, and I got out here because high probability that 61, maybe 65, maybe 70% chance that 61 fails. But if it doesn't fail, you're going to make 3 or 4 times your risk. So it's okay to buy 61 or sell 61. You just have to understand the math behind it, basically. So 63, I bought the close of 63. I thought we would get above the 56 high, 1 tick above, since it's a 3-bar micro channel. Those are magnets. We did get a tick above it during 67 and reversed down. The issue, when it's the target was far. So these bars aren't as big as I want them to be. It only got to half an hour. And then we got a reversal down 67 and 68. 67, 68 is a reversal and follow through against me. But with how strong the move up was, it's this really good 6-bar micro channel. Odds are after a complex pullback, we are going to get back above this 67 high. The minimum expectation would be the bar 66 close. 1 leg down, pullback, second leg down decently strong, third leg down. And you can see we never quite reached the symmetrical second leg, but we did get 0.5R, which ended up being the close of 66. So I had bought, and I bought more in here, and then I got out of everything up here for a small profit. So like I said, I ended up with a small loss on the day. But again, on the days, there was one of them last month, and there's one of them today. Usually about once a month, you're going to get a day where the 3-bar micro channel is going to get a breakout against it on every single bar. And when that happens, if you don't lose or you don't lose badly, you're doing fine, in my opinion. So first pullback, in a lot of bars, 1, 2, 3, 4, 5, 6, 7, 8, 9 bars. So odds are we do get back up here. This, if this gets follow through tomorrow, we should get 2 or 3 legs down, but it'll probably be a minor reversal, and then we'll get a second leg. It'll look similar to that last, I showed at the end of the day just then, probably. The weekly chart, consecutive bull bars. It's a late leg. Good looking bull bars, though. The bulls are hoping that we're going to get a breakout test of this high and then continue higher. And the bears are hoping that the breakout test fails and we go a lot lower. All right, that is going to be it for today.